Hi, everybody. This is Gary D with Sentiment Timing, and this is our technical video report for Thursday, July 31st, 2025. So the Bulls ended the month on a bad note. It's like I've been saying, the market's just so elevated right here that it had to take a break, and I believe this was the start of it, because you can tell right here every gap up that we've had, especially up to new all-time highs. You would see. Oh, hang on one second. Okay, so you can see like every gap to new all-time highs came. No, this is it right here. So we gapped up. And then from there, we came down and closed the gap the next day. This was on the July 3rd. Then we had another gap up, closed the gap. Then we had another gap up and closed the gap. And here's another one, closed the gap. So what it's telling us is every one of these gaps are getting filled the same day. And when we had this today, I put in the morning notes that I was, I said I'm looking to take any strength, and I'm unloading all of my quantum stocks. I'm actually cash right now with them, and I'm looking to buy them back at a discount. So it also said that we had the fade trade on, and basically that's when the S&P gaps to new all-time highs. You actually fade the first bar here. And what the trade is that within 2 days, this gap is going to get filled. Well, each one of them has been filled at the same time. So I sold some call premium up here. It wasn't a huge trade. I was really, really busy today with the fund and getting the new enrollment. So I didn't want to be leaving trades on that I wasn't really able to watch that much. So we put one on. We did pretty well. We made 1,800. I closed the QBTS trade, because what we did yesterday is we took the 18 calls and 18 puts, and when it went down, when it popped back up today, the calls were in the green. If I would have sold the puts yesterday, it would have been even better. But I didn't want to do that in case that we had another gap down, and that would, I didn't want to leave that much money on the floating there, because I was protected on both sides. So when QBTS came up and got into above 18, and the calls are in the green, I closed those, and now these puts are back in the money again. So that worked out good, and it's really one of those things that we were so overextended on all time frames right now that seeing a 5% pullback, whether it started today or it's going to start sometime in the next 2 weeks, would not surprise me. Just the way that this market has gone up, it's not sustainable. Nothing goes straight up, nothing goes straight down. So I think that we're going to come down and at least test this. The 6150, I believe it's going to be a lot more than that. And I think we'll come down and possibly test the 200-day moving average right around that 58.50 in that range there. And then from there, we should be out of the tough zone, and we'll probably be marching higher into to new all-time highs sometime in the fall. And then from there, I think we're going to make another, just important tops. And I'm just not getting greedy with this on either direction. So if we see that move to all-time highs and the quantum stocks are double where they are from now, I'm going to close them out and wait to buy at a discount and just keep doing the same thing. But today, it worked out very easy. In the trade room, what I had said, let me get to that here. So you can see at 9:32 in the morning, I said I'm going to take the 638 puts on spiders, and I'm going to hedge it. I'm going to do the IWM 221. So we, from here, you can see we came out. They gave us that. This was where we took the trade. Had a little bit of stress right here, but the thing is that this is why I hedged it. Was we had IWM that opened here, and that's where we took the 221s. And then from there, that made it all the way up to here. So these were really green right here. And again, I'm just using it as a hedge where if the indexes decide not to turn around today, then we would have seen IWM all the way up at 223, and we would have done it. That would have well outperformed, not outperformed, but as far as with our trade wise, it would have covered the SPY losses. But so I didn't really want to get cute with that, and I just left them on. So obviously the IWM calls went to worthless. But again, you look at the the spiders and what happened with that. I mean, if they held it till duration, what I had said to do was once we get this, I had a feeling was going to get pushed back down. But I said once we get to the close this gap, I said take your profits on it. So again, they took the 638 puts, and down here was at 634.75, or just say 635. So $3,000, and we lost $700 on IWM. So in the room, another net profit of $2,300 with zero stress at all, because when the markets went up, IWM went up, and we got great entries on both of them. And anybody that held it to duration, I mean, heck, you made $8,000 on that. So it was another easy, stress-free day, and I think we're really going to start seeing volatility pick up, and that's good because then we can take these hedge trades, whether it be a straddle or a hedge between the spiders and IWM, or strangle. When you get volatility and you see 1%, reversals in intraday, you make a lot of money on those, and that's where the fund's going to really pick up on things. So today, again, very easy day. Is it the start of a new, the leg down? Well, I'm not sure. This is the pattern that I pointed out in the room. I call it the nut hut. So basically, it's a reverse symmetrical triangle where it's coming up, hitting the bottom, coming up. It didn't really make it all the way up there today, but if we could just go like this, and you can see we're coming down, and this is pointing at a downside target someplace, pretty close to where it came to. I don't believe it's coming up here, but hey, I'm going to leave the door open. I'm not going to try to guess what the market's going to do. Like I said, I took the strength over the last week, and I unloaded the quantum stocks because we did fantastic on those, and I'm not going to be greedy and watch really good gains go down the drain and then start from scratch. So if it ends up that we still have another 3 weeks of upside and those things go up another 8-9%, yeah, it will suck, but who cares? We've already made our 20, 30, 40% on those trades, so we step aside, and if we have to just get back at where we dumped them, then we do that. I think we're going to be able to get out at lower levels, and that's why I've done this. So let's take a look. For the S&P, it came right down to this support line right here. That was at the right here. So it went a little bit below and then popped back up again. So that was what made sense, this little pop. And if it loses that, you can see we have this gap right here, as well as this support right at this area here. That's at the 62.94. That's the spiders. So let's do this. Let's go back to the 15 on here. So okay, now this makes it a little more easier for it. So here's the S&P, came down to the support. This is where we got that gap up, came down below it. Again, we have this support that's right at the hang on one second. I mean, because this target was reached. Remember, I was saying the 64.20 made it a little bit above it, 64.27, and that's where it reversed. So support levels are at, we landed at one at the close. We have some support right here at the 63.16, and if it gets below that, then we're really looking at a move coming all the way down to the 62.90, possibly even down to the 62.81. And this is the thing, this is the problem, is that if they lose that, now we're looking at a move to come all the way down and test this 6,200 level. So there's a big drop if this support gets lost. We could even bring this over a little bit and say, hang on one second, there we go. So this is, let's just go here. We're not going to try to be perfect on it. So you can say this 62.85, if it gets taken out, that's where I'm anticipating we're going to have an 85-point drop down to the 6,200. And then, again, we have these gaps that are down here that may get filled at 60.29. But the main support really is we have this 6,300, 62 82, and then we have the 200-day moving average at 62.50, and then we come down to this 6,200. If below that, that's where I'm believing we're going to come and test and close some of these gaps at the 6,000. And remember what I said in the morning notes. I was looking for anywhere from a 400 or 500 point drop, and that brings us pretty much right into this area. So remain cautious whether we do not, didn't make the low today or the top today. It's coming, and it's going to take people by surprise, because you can see every dip is getting bought. But when this gives way, these dip buyers become panic sellers. And when this gets taken out, that's when you start seeing a flush all the way down to the 6,200. So that's the bearish side and where support levels are. First, for the bulls, they're going to have to get it above the 63.75. If they do that, then I believe that we're going to see a move coming up to the 6,400, and then from there we would see a move coming up to test these highs here. But like I said, I think these bearish divergences that really had no play in it are going to, the piper's going to have to get paid, and we're going to see a larger drop, some that, more than I think some are anticipating. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.